is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, thank you everybody for coming out today. This is our first roadshow back in LA since before the pandemic. It's glad to be back in LA as well. We call it the 10 Capital Live because we've been on Zoom like everyone else has been for the last 4 years, and it's great to get back in person. We've been to Austin, Dallas, Bay Area, Chicago, and Seattle so far, on our way out to Orange County, New York, and DC to wrap up the year, also with Houston. So happy to be here today, and we have some great companies presenting. I want to thank everybody for joining us today, and just want to tell you a little bit about 10 Capital before we get into it. Of course, this is our agenda for today. We're going to introduce ourselves and some of our partners that helped us with us, Tech Coast Angels and some other guys. And then we're going to have 4 companies pitch. They each get 10 minutes to pitch, 5-minute Q&A. We're going to get asked a Q&A there as well. Before we break for lunch, a break for the coffee in the middle, we'll use these QR codes on here to just take a picture of that QR code and give us some feedback on each of the startups that are in the room. And we have 2 of those, one for the first group and one for the second group as well. Found that was easier than filling out forms, but if it does fail, there is a form on the table too. So if you don't want to do QR codes, you can use paper. We can still do that also. And then we have a happy hour afterwards. We're going to walk down the street to Cuvée and that 5-minute walk for a happy hour for those who are going to join us afterwards. It could be a lot of fun as well. So that's our agenda for the day. I want to thank everybody for coming out here and want to tell you a little bit more about 10 Capital. We help startups raise funding from investors, and those investors include angels, venture capital, and family offices. And in addition to that, we're not a broker. I started 3 angel networks in Texas back in the 2000s. I started the Central Texas Angel Network in 2006 and the Baylor Angel Network in 2007. And the Wilco Angel Network in 2008, that's a county north of Austin. Having more fun doing angel work than my day job. So in 2009, I retired from my day job, started my second career, which was doing Texas Entrepreneurs Network, is what we called it for the first 5 years. And it was basically helping startups raise funding, get the documents ready, get out and pitch. And most importantly, that we would focus on follow up to close. This is the hard part. Everybody wants to pitch. Nobody wants to go back and pick up the check. So we were spending most of our time in that time frame. By 2017, we had grown our investor network to about 10,000. We had gone to the Bay Area and New York for VCs. A whole bunch of family offices come into 2016 into our network because they wanted to do a deal more online than in person at that time. And so we started getting calls from outside of Texas. We would get calls from Chicago, New York, Seattle, and other places saying, I've talked to everybody in my town, now what? Well, come to us and we'll put you in front of investors in other parts of the country. Back then it was very regionalized and we were just taking them to other places. And so we charge the companies a fee to go through our program, but we're not a broker. We don't charge success fees. I looked at the broker model, but found that I was going to lose almost all my angel groups and all my VC funds because they don't let brokers in the deal. So that's how we got into it. As we went on, we had a small group here, as you see up here. We were 4 or 5 people. We had recently expanded. We're almost 10 people now. We added more people into the program because we've added more features. And the features we added are these. Number 1 is we help angel groups find members. You ever go to an angel group and say, I have deals for you, they'll look at you like, I have all the deals in the world. I don't need your deals. I need members. And so what we found is that we had over almost 100,000 angels around the country in our network somewhere doing something, and have found that angels are often more successful if they're part of a group than if they're by themselves. They share the deal flow, they share the diligence, and they stay with it longer. So we help angel groups find members. We've done this with the Central Texas Angel Network, Frontier Angel Network, New Mexico Angel Network, and about a dozen other groups have come to us saying, you know, help me find members. Hey, I'll really like that. And we don't charge money for that. We just say, look at our startups as potential candidates as well. And the next thing we do is we help venture capital funds find limited partners, primarily family offices. And what we found is that in today's model, if you're a new emerging manager, you really can't get going, or it's hard to get going because the big funds won't put money into an emerging manager, and you have to have a $100 million fund just to even get in the door with many of the groups. And most of these are $50, $60 million funds. And so we help them find limited partners through our family office program. We do a 2-hour online family office roundtable every month. in which we bring out a VC fund and a startup to pitch to family offices, and we're giving content that's of interest to the family office. And we're growing these online, and now we're doing in-person family office programs. We got into this in New Mexico when I was helping the New Mexico Angel Networks find members. I went out to help them do a restart, and after we finished that, got it up and running, I asked, what do you guys do for family offices? Well, we don't do anything. Well, how many do you have? Maybe 30. Well, in Texas, we have a family office panel on every corner every other day, and thought, well, we ought to do a family office panel. So I went out and said, who wants to help me put a family office panel together? 4 VCs raised their hands. Oh, why do you want to do that? Oh, you want the relationship to you ask for funds later. So we did that. We later discovered, we put the program together, had 60 people come out, 30 family offices for their first event, and had such a good success with it that we do it every 6 months. We have another family office panel. We've been in Santa Fe, been in Albuquerque, been in Taos, we've been all over the place. October 15th, we'll be going back to the Hotel Chaco in Albuquerque to do another family office panel. Oh, by the way, there's 175 family offices in New Mexico, and a quarter are oil and gas, quarter real estate, and half are everything else. But we have enabled VCs to raise money through those network connections. We're now doing that program in Austin, Dallas, Bay Area, and New York, and we'd like to come and do that here as well. So anybody that wants to help us put a family office panel together in this area, we'll see you afterwards to talk about how that might work. And then finally, we help start family offices. We found that was in our first family office panel, I had several people coming to me saying, I'm in the $25 to $50 million category, and I want to start a family office, but nobody in the family office world will talk to me about that. Well, why is that? Well, you don't have $100 million. If you don't have $100 million, you don't fit the model, so to speak. And have found that there was a lot of people moving into the family office space for tax reasons. It's a great vehicle for protecting your assets, with the estate tax coming back on the table. A lot of people are moving in that direction. And have found that with the new world of being online, virtual, remote, there's this virtual family office model that comes out that says you can be successful at $50 million. You don't have to have 100, because you don't need 4 full-time people in your physical office because you no longer have a physical office. So have found that starting these family offices is one of the key areas that we're investing a lot of resource in putting these programs together. I'd love to have them come out and look at your fund and your startup and what you're doing as well. So those are the programs that we're running that are going on behind the scenes. And that's how we're different from other groups. We're not just raising funding, we're actually building the ecosystem by forming capital as best we can throughout the market. So if you like to learn more about Tin Capital, you can scan the QR code and we'll talk to you about joining our program and what we do. We help you put your documents together. We help you get in front of investors. We help you follow up. We use online events to do the introduction. We do in-person events like this one here to meet people. And then we do dinner events to close. What we found is that the online is great for starting the conversation. In fact, after the pandemic, everybody wants to start with Zoom. Even if you're across next to them, they want to be on Zoom to actually get that part done because it's efficient. But the mistake is that it's very hard to close online. You have to go back in person to close. That's what we found. So that's why we have in-person meetings like this, and then we use dinner events to close where the interest lies. So this afternoon, we have the codes that you'll see on the table there. We put your feedback that you can with us and so forth for being here as well. The last thing, and then I'll have some of our partners come up. We'll start with Armand, our post sponsor here today. Is I write a blog post. I have a podcast program called Investor Connect. I've done 820 interviews of people over the last 10 years, VC, angel, family offices of how do you invest and so forth. I got into it because when I talk to angel group leaders, they say my number one regret was I did not put any institutional knowledge in place. So I train a group of angel investors on how to invest. They get 2 or 3 years in the road, and they start getting better at it. And 4 or 5 years, they get really good at it. In year 6, they retire. And so we then start all over again with a new group of angel investors, and they're learning all over again, making the same mistakes. I was trying to capture information from other angels to share with them about how you make investments as well. Later wanted to do family offices and VC funds, and so I changed it to Investor Connect. Along the way, I decided to write a short form blog post called the Startup Funding Espresso. And the time it takes you to drink an espresso, you can learn something about startup funding and investing. I'm up to about 2,000 of those. I do one a day, and was putting them out in an email fashion, one at a time. and found that it was just hard to, sometimes the topic was interesting for you, sometimes it wasn't. And I was trying to figure out, well, how do I take all of these espressos and put them in one place that people could search? And then when AI came out, I said, well, that's the answer. So I put them behind an AI chatbot. Trying to figure out what to call it right now. But if you go to startupfundingespresso.com and you go to the bottom right corner and click on the little button there, that is where chatbots live, up pops a prompt where you can type in your question and it'll scan the 2,000 espressos and give you a correlated answer. Oh, by the way, ChatGPT is behind it, so it can give you a whole bunch more information as well. No cost to this, but this is one way we go out to the marketplace, is to take what we know and institutionalize the knowledge, make it available to everybody else in the community. So I'm looking forward to your feedback on that as well. So with that, you see the evolution. We came from Texas. We in 2016 went to 10 Capital, and then we are now 10 Capital Network with the family offices, the angel groups that we work with today. We work with about 30 angel groups so far. We have about 2,000 family offices in the network and about 200 that are actively participating in the program at this point. And we're continuing to grow the ecosystem through those methods. And here we are today with some of the events that we have. And with that, if you want to check out our upcoming events, we're at this QR code here to go to 10capital.group. You can see the Family Office Roundtable and other online events and sign up for that. Half the events up there are online, so you can access it anytime, get the recording afterwards. So with that, these are the cities we're going to. As we said before, we're on our way out to Orange County, New York, DC, and Houston to finish up the year. And next year, we'll do these cities plus Phoenix, Nashville, and Salt Lake City, and some of the secondary cities that are out there. We've already talked about the Investor Connect. If anybody would like to have me capture their story, I'd love to get your feedback on what you guys are doing and share that with the other two. Mostly these are 30-minute podcasts that are done over on Riverside, so very easy to do and put those together. But I always recommend you want to do down there. We also have a mentor and advisor program. We have most of the angels coming to us saying, I want to give back. I want to do more than just invest. And we have a way of connecting them with some of the companies that we have in our program. So with that, I want to thank some of the groups that came out today and have them come up. First, I want to have Armand come up and talk about this beautiful building we have here. We first met Armand in the Bay Area last May when we did this in the Palo Alto office, which is, again, a beautiful office. And Armand was great to be a part of this. So Armand,
Yeah,
I'll give you some time.
I come over there.
Yes.
Thank you very much. Nice of you too. So do I don't need any contractions. I can just talk. Yep. Welcome. Thank you so much for coming. My name is Armand, last name Palavan. I'm a partner at Perkins Coie. I sit in our Palo Alto office, though we're all kind of ubiquitous, right? Depending on what happens when. Alan reached out to me, I want to say about a year ago, I think, to tell me about what you guys are doing. And, the entire field of venture capital is only about one thing, and it's the ecosystem. That's it. And the ecosystem starts with angels putting money to launch these companies, right? So without that, sliver of angel money, none of this would happen, right? And it's proven to be true decades now, where venture capital was really nothing of an industry, and now it's become a multi-billion-dollar industry on an annual basis. And frankly, that's even too small of a number, because if you need to double count this to say, okay, there's $50 billion that is going in, or $100 billion that is going in the venture capital funds on an annual basis. Then this is throwing off 2% management fees or 2.5% management fees. So that's another sliver that gets, out to the general partners, and it doesn't get counted in the $50 to $100 billion, whatever the numbers are. So it is a fabulous industry, and thanks to the angels who really kind of spearhead this thing and get it started. To tell you a little bit about myself and about the firm has been around for 100+ years. It grew out of Seattle with Boeing as our first client for the firm. So we still serve Boeing now a century later. And, given that the nature of the firm, the hubris of the firm, was tied to Boeing initially, and because Seattle became a very major technology spot, this concept of helping technology companies became really the fabric of our firm. So even though we do lots of real estate and land use and we do bankruptcy for all sorts of industry, we do retail and fashion and many other industries. Really, the technology industry is the core of what the firm started as and continues. We incorporated Amazon. We're extremely close with Microsoft, given that we're in Seattle. We represent Gates' family office. We incorporated Cloudera and Zillow and Trulia and many other companies. So it really is part of the fabric of the firm. And I'm part of a practice called the Emerging Companies and Venture Capital. So it covers quite a bit. And we help companies get financed. And my practice is tied to the broader aspect of what I call private equity. And the broader aspect really starts with forming these investment funds. So I do the fund formation work, and I help the general partners bring in the money to kind of launch these investment funds. Then they typically engage in two kinds of equity investment. Either they do a controlled investment where they hold the majority of the designation of the board and majority of the share ownership of the company, and that's private equity. And that can be done either in 51% ownership interest or larger or wholesale M&A transactions. And then there's minority investments, which is venture capital, where investors are putting in money where they get 20% or less of the company. And then we join the portfolio companies as their outside counsel and do all their work and labor and employment and executive comp and frankly, leases and real estate, divestiture of some assets, selling the company and taking it public. So that's kind of like my practice and that's my board. And I have to tell you, to me, being here doesn't feel like work. Working with all of you companies and venture capital funds and investors doesn't feel like work. It's something that really is second nature to me now. And I love doing the work. So thank you for coming to our LA office. Really, hat off to you for all this incredible stuff you're doing. And we look forward to being part of the ecosystem. Thank you.
Thank you. The second part I want to bring up is Carissa of Tech Coast Angels. We work with many people at Tech Coast Angels, Dave Freeman and others. They sit on our panels, they give us feedback, they help us in what we're doing. And wanted to just talk more about their new move into being TCA Ventures and what they're doing. Carissa?
Okay, thank you. Good afternoon, everyone. Carissa Kosterpour. I'm the president of Tech Coast Angels in LA. So a little bit about Tech Coast Angels. We have, I would say, over 550 members. Most of our networks are in Southern California. So we have Los Angeles, which is the largest group, I would say, plus 125 members. And then Orange County, Inland Empire, and then Pasadena Angels, Meta Angels are a licensee of Tech Coast Angels. And we just added a group in Southeast the United States. So Florida, Georgia. So they're now a new member of the family. We typically, the value and what we pride ourselves of is our members come from diverse background. We're segment agnostic. Our members are, of course, very savvy investors. At the same time, they're founders, entrepreneurs, which had successful exits, executives in large organizations. So not only we learn a lot from each other because we all represent different segments and we continuously learn from each other. Also, when we look at a deal, we have really diverse expertise to help us decide on a deal. We typically invest in a pre-seed seed rounds, and our members can invest through either a fund, individual checks, or both. So we encourage our members to participate in our fund. And then, but if they like a deal a lot, they can write individual checks as well, or just write a check. And our typical investment, I guess it depends on the level of interest, can range, I would say, if the fund also invests, can range anywhere from $150K to maybe $450, $500. That's if an individual network, so say LA invests. But every time we invest in a deal, we share it with all the networks, right? We let them know we're investing in this, we have a due diligence, are you interested? And this way, not only we can combine due diligence or just share our due diligence with the other networks so they can decide. So we've raised as much as $1 million for a particular startup if other networks are interested. We also can help syndicate. So with the Angel Network Association. So once we decide that we have invested and we have a due diligence and we're willing to share the due diligence, we can put it front and nominate for them to present to the other angel groups. And of course, our members have a lot of networks, so we share deals with other VCs and angel groups. They share their deals with us and we do vice versa. We have a couple of our members here, so I'll let them introduce themselves as well. Yeah, Lucas.
I'm Lucas, former president of LA, great group to be part of. Yeah, I've been investing for 7-8 years and yeah, so quick and dirty.
Great, Jared.
George Kazaks, fairly new to the angel investing world, PCA as of early January this year, but my history has been on the talent acquisition side of the ecosystem, helping start find most critical talent, engineering, product design, et cetera, from founding level, VC, who grow, exit, PE, private, so the whole gamut. And over that, 15-year period, we invested probably ourselves as investors, like 450 different companies along the way. So that's kind of the baseline for my participation in the
Great.
All right.
Great, thank you so much.
The next one is Robin of Pitch Force. We've had a great deal of results from with working with the Pitch Force organization. I sit on their panels quite often, and they work with us as well, helping people get ready for going out to raising funding. Robin, what can you tell us more about Pitch Force and People Connect?
Well, thank you, Hawk. So with Pitch Force, we help startups with connecting with investors through our weekly virtual events. We have 6 companies pitch to a panel of 6 investors. Also, anyone can watch and investors do and investing companies from that direction. And People Connect is our main business, and we focus on helping startups add the right people to the team, any level from C-suite down to individual contributors. And we also have more in-person events coming up since COVID, made us all go virtual for everything. Now we're going to be actually at Expert Dojo on the 25th for an AI conference in Pitch Force in the evening. So from 5 to 9. So if anyone would like to join us, we'd love to help you.
Great. Other sponsors are Expert Dojo. Brian McMahon helped promote this out to the marketplace, and we have many people online that came from that. We have a VC fund here called Vishal Aurora that is called VDOSH is the name of the fund. And I believe he's going to be at the Orange County event instead of the LA one. And then we work with Jordan Wabe in the Bay Area Silicon Valley Venture Group. He's been very instrumental in helping us get our program back up and running in the Bay Area. So we appreciate all of our partner support and what they have done for us as well. So with that, I think we finished our partner presentations and so forth, and want to go ahead and start kicking off with the company presentation. So our first presenter, Dylan Jones. Dylan, you come on up and get the slides ready. Like I say, they'll have 10 minutes of pitch, 5 minutes of Q&A. We're looking forward to your questions that you have with it as well. And then we'll see online if anybody has any questions as well.
Howdy, y'all. I'm Dylan. So nice to meet everyone here. I'm looking forward to getting to know y'all at the breaks and the happy hour. And it was really great hearing everyone's spiel about what they do. So I have it's called Licks. It's a hydration business for dogs, sort of like Gatorade for your doggo. Now, the problem is that hydration is super important for dogs, but it's not always easy to keep our dogs hydrated. And this can be seen if you maybe have a surprise $500, $600, $700 bill from the vet because you have to take them to get them rehydrated through an IV. You also see this if your dog is like mine, super active, loves to play, loves to go on walks, but when you come home, you just can't get them to their water or feed bowl. All they want to do is pass out on the tile and they're panting. Or maybe your dog is sick, like some of our customers, and they're not drinking and eating like they should, or they're stressed out from separation anxiety when you go to work and you come home and notice their water bowl isn't touched, or maybe they're getting older and they're just not going to that food and water bowl like they used to. Whatever the problem is that you might be experiencing with your dog, this is a big problem in a big market. More than 70% of Americans have a pet. It's about 235 million pet parents in America. And like we like to say, good dogs deserve great water. And it doesn't matter if you're Gen Z or millennial who are adopting pets at a faster rate than having children, or you're part of the baby boomer generation. Wherever you fall on the generational spectrum, pet parents love their pets, and 8 out of 10 pet parents agree that they're willing to cut back spending in other places before they cut back spending on the health and wellness of their pet. Now, you might go to the pet store and you go into the food aisle and you're going to see a ton of innovation. You're going to see every flavor, all different types of packagings and designs, all the treats. But there's this massive white space that's been created in pet hydration. Not to say that there isn't competition there, but it's really limited. And the only alternative that you have is water. But like we know, not all dogs like to always drink their water. And this problem is so significant that even the US military has been researching solutions to figure out how to keep the most active, well-trained dogs drinking water when it's important. They also suffer from this problem. Well, I used to have a fixed consulting business and I used to work with military dogs. And I learned about the research that was being done in pet hydration. And so I created my own product. It's the Essential Hydration Treat for your pet. It's an all-natural blend of coconut water and chicken broth. It's all the delicious things that your pet loves, made in an easy on-the-go stick pack. So think of it like a Crystal Light pack or a liquid IV pack or any type of powdered pack that you might put in a water bottle. You can do the same for your pet. So you can mix it into water. You can also use it as a rehydrating food topper, or you can even freeze it into ice cubes. I mean, it's electrolytes that taste like chicken. It's still switcheroo. So why choose us? Well, we have proven market traction. We have 13,000 followers on Instagram. I started this company last year with a liquid product. I was beta testing. I was doing a lot of customer discovery, understanding who the customer is, what problems they were experiencing, what value propositions they cared about. We did about 25,000 in beta sales. The average customer lifetime value through my Shopify store had about $250. And with about 1% of those customers reaching $425 plus before I shut the website down and made the pivot to the powdered product. So we have a subscription model that is available. That's how we're starting to generate that lifetime value in the customer. Just some key highlights here. Pet spending is rising. Food subscriptions in the pet food category is the highest annual growth rate out of any. We sell digitally through Amazon online, Walmart online, Shopify, influencers through social media, retargeting folks through email campaigns, SEO optimization. We're in physical channels. We go to events like dog competitions. There's some big ones out in Florida, some national competitions in Florida, Missouri. They're in all 50 states. There's more competitions than there are Major League Baseball games throughout the year. And then we were one of 60 companies selected in DFW to present at a brand showcase where we got interest from big box stores like Central Market, H-E-B, Costco, Sam's Club. So the e-com strategy, so kind of diving in a little bit deeper to what I was talking about on the subscription model. So we're partnering with the absolute best in the industry to help me manage my supply chain. So raw materials are all managed by DFW CPG and some really trusted sources within a strong network in Dallas-Fort Worth area. Across the street from where everything's manufactured in Dallas is our logistics center where everything goes for fulfillment. Our Amazon is managed by ex-Amazon trained employees. So they manage our listings, optimize our offering, manage the inventory in that listing. So we're not paying holding costs, things like that. And then we have some really great demand generators on our side. 6+1, I'll speak on them a little bit more here soon. But Dog Connectors, they're a niche within the pet industry. They have 20,000 influencers that we have access to through that partnership. And they help manage the D2C channels and our social media channels. So what's really exciting about the product pivot is the increased margins that we have on every unit sold. So we're starting with our soft launch going in October. We sell 28 individual stick packs and 1 pouch. We sell that for $55. We have pre-sale open now. We're sitting at an 87% margin. And just on the cost highlights there, we'll be hitting 90% plus margins once we start optimizing our offerings, our supplier negotiations, start to cut down fulfillment costs, things like that. So our team is made up of me. I'm an Air Force veteran, worked with military dogs. After service, when I started my first business, it was a software company for military dogs. Let's see. Eric, he's an absolute rock star on the team. He's the creative officer of 6+1 and acts as our creative director. He's launched iconic brands like Vitamin Water, Body Armor, other brands like Pirates Booty has been part of those exits. We have advisors like Rogers Healy, who you may have seen on the TV show Entrepreneur Elevator Pitch. John Paglia, he's a finance professor at Pepperdine University. David Gearing's a co-founder with Bryson DeChambeau, and again, some of our partners down there. Oh, I do want to touch on this partner right here. So for every unit sold, we give back to a foundation called the Warrior Dog Foundation. And they're really, really cool. So essentially what they do is ran by an ex-Navy SEAL who used to train military dogs for special operations. Now he goes and adopts those dogs after service and gives them a second life after retirement. So we're raising $250,000 from 15% equity. Most of it's going to be spent in digital marketing, some of the event marketing, so we can have presence at some of those tech competitions where we find a lot of our early adopters, and then payroll for the starving entrepreneur up here. So yeah, thank you guys so much. I appreciate it. And I'll just turn the time back to y'all for questions.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.